discuss when is the worst time to buy assets, okay? So here's the lesson is very simple. Buy an asset during a market bubble is very dangerous. A market bubble, as I just mentioned, is when asset prices are much higher than their underlying fundamentals can reasonably justify. In other words, when things aren't worth what you're paying for them. They're not worth that anymore, okay? They're overpriced is another way of saying it. The thing about asset bubbles, though, is that no one knows when the bubble is going to pop. If you knew that, if you had a crystal ball and you're like, okay, on March 25th, tomorrow, the stock market bubble will pop. Then you get out the day before or at the very top, right? You'd sell your assets for a huge profit at the very top, knowing when the bubble was going to pop. But nobody is clairvoyant. Nobody knows the future. So you might just hang in there a little bit longer. Ooh, it's got another week, or maybe it's got another month, or another quarter of the cycle of business quarterly earnings. Maybe I'll get out then. And who knows? You might have been right, and you're thinking that that's when the bubble is going to finally pop, or you might have been wrong, and it pops before that, and you lose money big time, right? So let's take a look at one example. For example, I bought a house back in 2002. So if you look at the chart on page 70. I don't know if I have it here, but let me go ahead and put it. Okay, maybe it's not on this one. Yeah, this is it. So in 2002, I bought with my ex-wife a townhome in San Jose, Silicon Valley. Okay? It was hard to qualify even back then with 2 teacher salaries. So we were making about 120 together, 60 each. This is in 2002, that's pretty good money. But even then it was hard to qualify because we were first-time home buyers. And that's the hardest time to qualify, guys, when you're a first-time home buyer, because you got no track record of ever paying a mortgage. And the rates are gonna be, they're gonna be decent for first-time home buyers. It might get you into a program, but your payments are gonna be sky high if you don't get a 30-year fixed mortgage and you end up with a crappy mortgage. They don't sell those types of mortgages anymore because of what happened, okay, with the bubble bursting. But they're starting to, or they might be trying to do something to fix the system, because right now it's incredibly hard for first-time home buyers to get into a house. Prices are high, mortgage rates are high. That's a bad combo. But anyway, I got it in 2002, somewhere around here, at the bottom, near the bottom of the bubble that would burst sometime here with the Great Recession. That's what it was known. Okay, the Great Recession. Now, when I bought my townhome, I then sold it 3 years later with my ex-wife in San Jose. We made $75,000 net after paying the realtor, after paying the mortgage company. So that was pretty good money in 2 years' time, or 3 years' time. 2005 is when we sold. 3 years' time, we netted $75,000. Or it was more than that. It was $86,000 now that I recall. So then we decided to move here, SoCal, in 2005. We looked at houses here in Oceanside, and we got in what we thought was a deal. 5-bedroom, which I still have. 5-bedroom in a loft house, 3,200 square feet, a huge house, huge lot, $754,000. Okay, we put down 10%. So we put 10% down. Today they make you put 20% down to be on the safe side, because a lot of banks failed when that bubble popped for doing all kinds of unscrupulous things, selling anyone off the street a mortgage. Oh, here you go, sir. Don't worry, it'll go up, and then you can sell it and make a profit in 2 years' time, 3 years' time. So banks all over the country were getting people into their mortgages, bad mortgages, okay, that weren't even fixed interest rates, meaning the interest rates can fluctuate. One month they could be at 4%, a month later they could be at 6%, so now you're paying more per month. Okay, those are called fixed, variable rate mortgages, variable rate. You never want to get one of those. Never get a variable rate. Always get a fixed rate mortgage. So we got a fixed rate mortgage, but we only put 10% down. Okay, we didn't have to put all of our capital in. We put 10%. Anyway, for a little bit, it looked like we made a pretty good move. Okay, because we went from 05, which is around here, to 2006, 7, and 8. Our house had gone up to $815,000. So we made 750 plus another 50, 800, 50 plus 65,000. We were up $65,000 by 2008 or 2007, whenever the Great Recession started. And then what happened? It all went to hell. Okay, the bubble popped. Okay, the story of why, you might want to watch a movie called The Big Short that explains why. It's a little technical for me to explain to you guys. Main point is, look what happens after a bubble pops, right? If you had sold here at the top, you were sitting golden. You knew it was coming. Some people did. Smart people knew, the smart money knew that it was going to burst, the bubble. And they sold their assets. They sold their stocks. They sold their house even maybe and got out. But then there were people who thought the party was going to last forever. And that's what a bubble is. Euphoria. Everybody's making money. It's the world's best time to be alive, right? Everybody's making money. Nobody wants to leave the party. Everybody wants to stay. And then it finally pops. Okay, this has happened repeatedly. The reason I'm telling you this is because it's not the first time in the history of the planet, of humans. It's happened before. And will continue to happen. Look at housing bubble 2. Right now, home prices are at their highest levels in history. Okay? So what do you think is going to happen? History repeats itself, right? Either the prices burst or something happens and the system breaks. Can't keep going forever. Okay? So, main idea is, when do you, as an investor, if you got stocks do this too, not just the real estate market. Okay? So, where are we? Are we at the point of delusion where we think stocks will go up forever? Do we think this is, they always say things are different. So if you hear the words, oh, this time it's different, it's not going to pop. That's when the news, the talking heads in the news, and they say, oh, this time it's different, it's not going to pop. That's the time to get out, because it's going to pop. Okay? So those are key words that you might want to listen to when you're an investor, because chances are we're at the end. We're at the very top. Okay? And so this is what happens not just to assets, but to the economy. Okay? It undulates from times of, greatness to times of depression and recession. And it's not just happening to these two types of markets, the housing and the stock market. Okay? But anyway, so main idea here, if you're an investor, you never know when it's going to pop, but at some point it will. So you want to listen for things that's happening out there. People are euphoric. So everybody's happy. Everybody's talking about how much money they're making. You go to the water cooler at your job and somebody's saying, oh, I made a killing on this stock. You need to get in the stock market right now, so-and-so, because you're missing out. And people do, because what is it? Fear of missing out. What does that stand for? What is the acronym for that? Fear, F-O-M-O, FOMO. Okay, if you ever see FOMO amongst the old heads like me talking about FOMO, it's fear of missing out. And that's the reason why investors pile in. These guys come late to the party, at the very end. It's like Cinderella. The clock's going to strike at 12, right? And if she doesn't leave, she's going to turn back into her poor self. Well, these are the people rushing in at the very end, driving prices even higher, temporarily. But when everybody and their mom, even grandma's talking about the stock market, you know it's a bubble, okay? It's time to get out, because it's going to pop. And it might take 6 months. It might take 7 months, 8 months. And you might start to doubt yourself because you missed out on getting that extra little push of money in your investments. But you might have made the right call. You might have been just a tad bit early because no one has a crystal ball to know when exactly the bubble is going to burst. Okay? So that's my lesson for today. When things start to go crazy, euphoria hits, grandma's talking about the stock market, the talking heads are saying things are going to be different this time, don't worry, stock market's still going to keep rising. It's not a bubble, it's a bubble, and it's going to pop. Time to sell. Got it?